Hi everyone, thanks for joining me again. It's Doug Atkinson at Black Sun Mortgage, and here I am to talk about financing and mortgages for Unit 112-9339 University Crescent on Burnaby Mountain. I hope you enjoyed the tour, but let's get right into the numbers. So the asking price on the property is $549,000. With 5% down, it would be $29,900 on the first mortgage. Now, as you can see in my chart here, it's actually 5.45%. As you know, anything over $500,000, the amount changes. You can't put 5% down only on properties under $500,000. So in this case, it's going to be 5.45% down, which is $29,900. The mortgage insurance, whether you're at CMHC, would be $20,764 added to it. So your total mortgage required is $539,864. At a 25-year amortization, and the current rate for a 5-year fix is 3.89%. Your monthly mortgage payment is $2,808. Now, remember, you do have a $353 maintenance fee that gets plugged on top of that, a portion of your property taxes, which is about over $1,300 a year. So there's an additional $100 a month. In order to qualify for that mortgage, you would need an income of $124,670. Now, remember, here in Canada, we qualify on a benchmark rate of 5.25%. And so in order to qualify for the mortgage to begin with, it would be qualified at 5.25%, which means you would have to show an income of $140,000. So that could be a double income. There's two of you or one of you that makes a lot of money. However, that would be the qualifying rate. Then you can get the discounted mortgage rates, 3.89. You can do a 3-year term, whatever you'd like. We have 10% down. Again, you're putting $54,900, and the mortgage insurance would be much less at $15,317. You would be mortgaging $509,000 and a 25-year amortization at $2,650 a month. But if you're able to put 20% down, and this is considered a conventional mortgage here in Canada, it did at one time used to be 25%. It is now 20%. At 20% down, there is no mortgage insurance, and the total mortgage, total down payment would be $109,800. Your total mortgage would be $439,200, and because it's a conventional mortgage, we can up the amortization to 30 years instead of 25, which gives you a much smaller monthly payment of $2,061. So if you have a 20% down payment, this would probably be a way to go. You just have less monthly costs involved. And again, this is something you have to consider. Also, on top of this, you have property transfer tax that you pay, which is also a cash amount that's included that you'd have to include with your down payment. It can't be rolled into the mortgage, and that is $8,980. So you have to keep these all in consideration when qualifying for the mortgage, because they'll look at your gross debt, which would be your car payments, credit cards, cell phone, any other loans, mortgages, RSP loans, all those sort of things are taken into consideration to help you qualify for a mortgage. So remember, when you are qualifying for a mortgage, this is something very important, between the point where you get the approval and then the point of closing, the banks are still watching you. So do not get a new car loan. Do not sign for another loan for somebody else. Do not have your mortgage broker start looking for other loans. This triggers the bank that you just have the approval for, who are ready to close on your property, and it puts up a red flag, and they can deny you the financing at the last minute. So don't make any huge changes during the period where you get your approval, you made your contract, you're ready to wait and close, which could be anywhere from 15 to 60 days. Do not make any huge purchases or help anybody else or lend any money or buy a new car. hold off until you get into the house, because again, the bank could change their mind. So hopefully that's a little helpful hint for you, and I look forward to talking to you on the next financing question period. All right, thanks again for coming, and we'll see you next time.